Hi there everyone, good morning. Thanks for starting your day with us. This is The Market. I'm Avan Dabas. Joining me is Nikunj Dalmia, Aisha Faridi joining in just a bit. And what a day it turned out to be on D Street yesterday. We conquered that coveted level of 21,500 for the first time. Shut shop just a smidge below that level with heavyweights really playing a solid role. Reliance Industries incidentally was one of the biggest contributors, and although it might have been a slow move, it was a clear upward bias, and the markets managed to hold on to those levels. So yesterday you'd had support coming in from the FMCG basket. You had the Nifty metals index that snapped its 6-day gaining streak, and the mid and the small cap indices were in profit booking mode. So Nikunj, I guess that story of the tortoise and the hare really holds true, because we have managed to make it to that mark slowly and steadily.
And we're holding there. The interesting bit is that even though markets on every yardstick they are looking stretched, we've not had real great flows in last 2 days. Global cues have been slightly sticky, at best you would say neutral. Markets are holding on. The shallow dips, even if they're intraday, that has also been that also in a sense is inviting some new buyers, and that is the nature of the market, that everyone is on the sidelines waiting for a shallow decline, either to initiate a long or to add fresh positions. While we may argue about market being expensive, technicals being overstretched, but market positioning in a sense is clearly indicating that even in last 2 days flows have not been strong. This market is still holding steady. So it's no longer this one trick pony. That's one good news about the market, that only its FIs were driving the market. Second, what do you expect now as the year unwinds? Well, frankly, the markets will get into holiday mode now. Next week it's a truncated week. Typically the last few trading days in a sense, shutter down for global institutional investors. So I'm glad that markets are holding on despite FI flows. I think rather than last week expiry, a lot of action automatically will shift this week. So it would be interesting to see that how markets now move in next 2-3 days, given that next week in a sense would be the last trading week, which also has a holiday and which also coincides with an FNO expiry.
Okay, yes, indeed. And just to give you a sense as to what the global check-in is like, we did see Wall Street's benchmark indices rising. It was approaching their record highs, as you did have the Federal Reserve's recent dovish shift as well on rates. And that, I think, really bolstered sentiment the board. So it was a pretty smart move on Wall Street. This morning, the Asian markets as well rising in tandem with the what we witnessed on Wall Street. Japanese stocks in particular have extended their gains on the back of the monetary policy decision. But just speaking about sentiment back home as well, in light of the fact, Nikunj, that you alluded to, that it's expiry as well. And as of now, given that we're setting the stage for the holiday season, it seems that this buying on shallow declines, that is what really is continuing. And what's the expectation ahead of expiry?
See, I expect markets to really be very range bound, and I don't expect any large fireworks even in mid and small cap stocks, because frankly there is no calendar event. Whatever you had to get in terms of global cues, you pretty much know where the setup is. The fact that FIs are back, that narrative is known. So I think you may make a case that next couple of days could really be a upward bias, but in terms of a directional move, it's difficult to make a case for a strong 1,000-point plus kind of a Nifty rally. The best gains for the month of December in percentage terms, I think they are behind us, given that there is going to be this holiday season effect which would be at play. We don't have a Monday next week because it's Christmas, and then you pretty much will see markets, and then there's an FNO expiry after that. So I don't think you actually would see anything large in terms of a market move or market action. But the good thing for me is that last 2 days FIs were not there, and even though they were not there, the market has held on beautifully. So this entire thesis that it's only FIs who are driving the market, that in a sense is, I'm not saying it's getting challenged, but that's not the only trick in the town.
Yeah, and I think, we can't be so hung up on looking at the FII figure, or for that matter, the Nifty is consolidating, because look what's happening outside the index. Look at the block deals, the QIPs, the IPO market. There's so much money chugging along there.
So I'll address let's the IPO market, and just about everyone is now in a sense looking at the IPO market and saying, okay, it's like a carnival in the IPO market, and so many IPOs which are coming, and typically when IPOs come and when you got this crazy subscription numbers, is there a madness in the IPO market? And if there is madness in the IPO market, is it time now to really raise your ante and say that historically when that has happened, that's a concern? But hold on, stay with this graphic. 2021, the number of issues, and this is post-COVID, this is not once upon a time. Post-COVID, in 2021, the number of IPOs, and I'm talking about absolute number here, in 2023 is actually lower than 2021. Now, 2 weeks are still left, but I don't think any big IPOs are going to be coming in at the last week.
I didn't realize there were 63 IPOs.
Exactly, but then quantum.
Yeah.
See, ultimately
Small
what matters
ones,
is quantum. So 2021 was bigger or 2023 is bigger? What is your guess?
I mean, the current year, obviously. Look at the size of the IPOs.
Now let's look at the data. Guys, fire the data. It's only when I looked at the data yesterday. There you go, ladies. 2021, the IPO market raised 1 lakh crore. 2000, that was my reaction, wow.
Yeah.
See, that included an LIC and that included some big IPOs. So you may talk about the frenzy in the IPO market. You may talk about every morning we have a headline which says 3 IPOs opening, 2 IPOs listing, 2 IPOs in the corner. But in terms of the number, lower than last year, lower than 2021. In terms of quantum, much lower than 2021.
That's real trivia.
That's
I know you're going to quiz everyone who comes on the channel.
no, it's only when I look at the data.
Sure.
It's only when I look at the data you realize the data. I mean, Sumit's compiled this data. We are looking at this data, and for me, this is perhaps the biggest indicator of what the market perceives and what the reality is. So there is no bubble and trouble in the IPO market, guys. IPO market also, the dynamics have changed. The crazy subscription numbers are because the IPO market is only 3 days. So, a lot has changed there. So we've used this like a canary in a coal mine. Okay, IPO market madness, market top. Aisa nahi. The data is telling you a completely different story. In fact, we are lower than 2017.
Well, actually, you had Zomato, Nykaa, the entire class of 21 listing.
So data is data.
Tech,
So data is data. You had LIC.
Yeah.
So I'm saying ultimately that's the number which matters, the quantum. And on top of that, there is inflation and then earnings. So in fact, ideally the number should have been way above 1 lakh for me to use the word. There was Zomato, there was Paytm, there was Nykaa, there was Policy Bazaar, everything bunched up together. And there was LIC.
Yeah. And, also looking at the QIP numbers, they though are the highest since 2017.
See, QIP is a different kettle of fish altogether. I mean, the QIP happens is because in QIP the money actually goes in the company, and this is not where retail participation is there. This is where institutional participation is there. So, in terms of an instrument, it's a very different instrument. In terms of the promoter block deals, of course, it's much higher. So, I don't think QIP is a trend indicator of the real excitement or real madness. We are trying to say that IPO market always tells...
No, it's not. But I'm just talking about participation in the market.
Yes, of course. Because, companies are raising capital. Banks are raising capital. Companies are raising capital. And typically when companies raise capital, you would always say that, look, the money goes in the company and that money would be utilized for growth capital. But IPO market, when you look at the data and you say, okay, hold on. It is no madness in the IPO market. That the madness was what happened in 21. Zomato, Paytm, Nykaa, that everything came together in a matter of 3 months.
Yeah, absolutely. Okay, let's get back to tracking global data points. And Lisa here with all the overnight commentary. Lisa?
Right, a host of commentaries coming in from the Fed officials, and this is obviously centered around the rate about the rate decisions for the next the rate cut decision. So let's start with the Fed boss stick. Well, he doesn't see any urgency in cutting the rates, and he's watching the 3-month as well as the 6-month inflation rates going forward. And he says that though the inflation is headed in the right direction, however, it is still too high. And even though Fed has made tremendous progress on that, there's still way to go ahead for the inflation. Moving on to Fed Barkin, he has also mentioned on the inflation outlook, saying that the data has come in nicely, making good progress on inflation, and they are looking for consistency and breadth in the inflation data. But responded that if the inflation falls nicely, Fed would be responding appropriately to it. And compared to the consensus of the average FOMC member, he views inflation as a stubborner. But on the other hand, Fed President Mary Daly, she has given a positive outlook on the rate cut decisions that Fed has taken. It is appropriate for the central bank to begin looking ahead to lowering the interest rates in 2024, considering how inflation has improved this year. And the outlook for interest rates and inflation is very close to the median projection, according to Fed Delhi. Now, Mohammad El Arian, he has commented on the commentaries that is coming in from Fed officials, saying that the Fed Reserve may have stumbled into a two-pronged communication approach in response to how the market has interpreted the Fed speech, as well as considering the market, how quickly it reacts to the Fed fund rate decision. So yes, that was all on the global commentaries, especially highlighted on the Fed official commentaries coming in.
Very much for giving us that view, and that's exactly what the global commentary is indicating. Time to get technical, so let's find out what the levels are that we'll be watching out for. We've got Nooresh Merani joining in, and Nooresh, 21,500, Reliance Industries really leading the way. What's in store for us ahead of expiry?
So the trend remains up. We are continuing to see momentum across the world. We are hitting new highs in various indices globally as well. We've hit a new high on US indices, and S&P 500 is pretty close. So out here, the momentum continues. The next level which we watch out for is 21,650. Roughly, that is where some bit of a pause could come from. So the view is at current levels, the risk reward is not great on the indices, but you continue to ride on to the momentum purely with a trailing stop loss. And out here, we could possibly get into a consolidation phase pretty soon, wherein we could get into a range of say 21,200, 300 on the downside, 21,650, 700 on the upside. And post that, we make another fresh move. Same is the case with banks, relatively better looking, because from pre-COVID levels till now, banks have underperformed the Nifty by a big margin. So banks would continue to do the catch up. So structure is positive. You want to be buying on dips, not at current levels, and looking to actually look towards a bit of partial proof at booking around 27,650 odd levels.
So Nooresh, what's the stock alignment like? Mid caps or large caps?
So large caps and mid cap both. So first is a buy on IndusInd Bank. The stock has continued slowly and steadily, broke out above 1,500, made a move to 1,580, took a little bit of a pause yesterday during the day. But overall structure is positive. The stock used to be 1,600, 1,650 back in pre-COVID. So there's a lot to catch up, way away from all-time highs. Expecting this momentum to continue here, a buy at current levels, the stop loss at 1,500 and a target price of 1,700. Second is a buy on Voltas, which has been a major underperformer. The stock is still down from the 52-week highs. Made a strong and went sideways for the last 6 months. And yesterday was the first time where it saw a big candle and a good price volume indication. I would expect this momentum to continue towards 990. Stop loss to be kept at 880.
All right. Thanks very much, Nooresh. Those are your top recommendations. Let's get a move on then and find out what are the stocks that we're tracking today. Anisha is here to discuss just that. And the sector that you track very closely, IT, Accenture coming out with their numbers. And with respect to Q1, it's been a beat. Brokerages as well are pleased, and now it's going to be a strong rub-off.
Let's see whether there's a strong rub-off or not, because my guess is no bad news.
Who's pleased after these numbers?
The brokerages are calling it in line to a bit positive. There's nothing negative is all. So it's just that they're seeing the glass half full.
Accenture sharp slowdown in managed service to a 14-quarter low. Underwhelming guidance, no recovery in demand. I don't know what
it's the way you see it. So again, I can give you a different brokerage note which is saying that there is a silver lining, or the bookings are up 14%.
That kind of sums up the mood on IT. That's bad news is actually good news.
That's what I'm saying, that I'm guessing there's going to be
that it's very divided.
Yeah. I think it's neutral to positive. I don't see anything incrementally negative, to be honest. It's of course the market mood which will decide the stock move, because yesterday Accenture also was down about 0.5%. Now in terms of the good news, yes, there was a beat when it comes to the Q1 earnings, so no disappointment there. The second positive was the fact that the company has maintained its FY24 guidance, wherein they're talking about 2 to 5% growth. Now part of the street was anticipating that the lower end of the guidance guidance could be trimmed down, and maybe they'll talk about a 2 to 4% growth. That hasn't happened. So they're keeping the door open for a stronger recovery in the second half of the year, and that's why they're guiding for 2 to 5% growth. I know it's not a blow-away number, 2 to 5, but giving the environment, this will be taken well by the street. And this is coming despite a weaker guidance for Q2. So for Q2, they're talking about minus 2% to plus 2%, but the December quarter is usually impacted by furloughs, so shouldn't read too much into that. Separately, the other good news is order bookings have been strong. In fact, order bookings are up 14% year on year, and the book to bill has jumped up over the 1 mark now again. And also the headcount additions after 2 quarters of a bit of a no growth to a bit of a decline. Finally, they've added headcount to the tune of around 9,000. Remember, a couple of quarters we had seen that massive layoff headlines of around 16,000 people being laid off, etc. That has now turned. They've actually managed to hire people. Sectorally, yes, communications is weak. US is a bit weak, but at least Europe is bouncing back. And then you have BFSI also that reported mild growth. So again, it's half glass full, half glass empty. It's the way you want to see it.
See, I completely agree. Glass half full or glass half empty. I completely buy that argument. But the point is that will the situation change? I mean, will this glass remain half full or half empty for next year? That is what we need to figure out, right? And if you look at the stocks, Anisha, IT index this year has done much better than the banking index. For a sector where you may argue that, okay, the worst is behind us, incrementally things will increase, FY24 was a bad year, FY25 would be a better year. But is the rate of change markets pricing in? So that there you go. So if I'm optimistic, I would say glass half full, so 23% higher. If I'm optimistic, I would say it would be quarter glass half empty after Q4, right? And they're trading at a premium. So the theory and the thesis that IT, the worst is behind us, and I think that in a sense Accenture is indicating and Accenture is endorsing. But is that in the price? IT is not like a sector which is very cheap. In fact, if you ask me, if I do a pro rata analysis of growth versus valuations, banks is where there is visibility and there is attractive valuations. The setup for IT is that worst is behind us, but guys, what? We know that worst is behind us, the stocks have already run up. And that is my limited point, whether it's Accenture or IT companies. I don't think we are at the end of the tunnel for them. You can see light at the end of the tunnel, but markets are already pricing in as if that carnival era has started for them. Let me put it this way.
I completely agree with that, because valuation wise we are trading at 5-year average higher, as in even the IT index and the rest of the peers, and some of them are very expensive.
For IT, Santa has come early, and Santa is like 2 years away for the earnings.
Nikunj clearly is in Christmas spirits, right?
No
Quarter
red.
glass full. We know what you're thinking.
Christmas
but that
is,
also brings me to Varun Beverages. Since you're a teetotaler, we're talking about non-liquor companies. Yeah, they're looking to now expand geographical print.
Yes, and they had earlier indicated that South Africa is a region that they're looking at, and now they've finally made inroads into that. They have made a large acquisition, 1,320 crore, by buying out 100% stake in the beverage company. The deal is likely to be closed by July of next year. And remember, this company is the distributor and manufacturer of the Pepsi as well as own branded non-alcoholic beverages in South Africa. Now, there is quite a bit of an upside available for Varun Beverages, in the sense that in terms of valuation, this has been acquired at 0.6 times FY23 earnings, which is quite cheap by any metric. And even if you look at the history, we have seen that Varun Beverages has been able to scale up its acquisition in Africa. So whether it was Zimbabwe or even Nepal for that matter, they had turned around, and from pretty much starting from scratch, they had managed to gain quite a bit of market share. For South Africa as well, right now PepsiCo's market share is in single digits, but they see the possibility of scaling it up. So I think it's good news coming in. We have seen CLSA also upgrading the target price substantially on the counter, as well as their rating on Varun Beverages, and saying that this just gives that extra confidence about growth going forward. So yesterday it was about Pizza Hut and KFC, expanding, and today you have beverages to go with it.
Yeah, and the common thread here, just for viewers, is that it's owned, Devyani International is owned by the same group company. And the common thread here is that whether it is KFC or whether it is, Pepsi, it's the same PepsiCo which actually owns these, these brands. So look, what are they doing? They are actually pretty much doing exactly what Motherson Sumi has done in the past, which is that they are going and they're expanding businesses, and they are in a sense forging better ties with the current OEMs. In this case, Varun Beverages, look, they have a balance sheet which can support it. They have expertise in terms of managing the supply chain. And we are going to a very different geography where you know that, they can scale up and their relationship with Pepsi is so strong. So are they adding any one more growth frontier? Now, India is a very, as investors, we all understand India in terms of the terrain, in terms of law. Can they really do the same magic what they've done in India in other geographies? They've proven their bit in Zimbabwe, Anisha, like you said, but can they do that in South Africa at a much larger scale? But as a shareholder, you would say that, look, suddenly a new dimension of growth now gets added to Varun Beverages as a company, what they can do, looking at their capabilities.
All right, there you have it. That's Varun Beverages, Accenture. Thanks very much, Anisha, for highlighting some of those stocks in news. Well, before we take a quick break then, let's get in Kunal and find out what his top trading recommendations are. Kunal, hi there, morning. Let's get in your take then on yesterday's price action, the fact that we did manage to scale that mark of 21,500 and that a lot of the large caps did the heavy lifting.
Well, yeah, large caps supported quite well. You saw the Nifty. So I think in terms of the data, the only change which you've seen in terms of the data for the Nifty and Bank Nifty is rise in the open interest. And I think we've seen the synchronized action that whenever the indices have moved up higher or closed on a positive note, there has been a jump in the premiums for the indices, both Nifty and Bank Nifty, as well as a rise in open interest. So it moves in a very synchronized kind of a manner that traders are more biased towards the long side, trying to build up more positions whenever the index moves up higher, because that in sync helps the premiums also shoot up higher for the indices. So I would probably expect that this trend would continue for the index. My next targets on the index, since we've crossed the 2500 mark, would be closer to 22,200 for the Nifty.
And Kunal, what stocks are you betting on?
So I'll bet on few mid-cap names. IDFC First Bank yesterday managed to come back into that breakout mode about 90 levels. So would suggest a buy with a target of 96, stop loss at 87. And Voltas is the other stock which has confirmed a breakout of multiple swing patterns on the charts. So buy with a target of 980, stop loss at 875.
Okay, let's take a very quick break on that note. But since it's festivities galore and we are already in the Christmas spirit, Nikunj actually caught up with the IHL management. Here's an excerpt from that chat.
We are completing 40 years next year हमारे कॉलेज के and काफ़ी लोग मिल रहे हैं और उम्मीद कर रहे हैं कि मिस्टर चटवाल आएंगे मिस्टर चटवाल हाँ बोल के राजी नहीं है ऐसा क्यों
There is a clash in the date with ITB in Berlin, which is the most important trade fair हमारे उसमें. Now that हमने Frankfurt sign किया है और उसको अगले साल खोलना है, I am the only German-speaking person in the company. और मैं ही वहाँ पे नहीं होगा तो there is a expectation कि at least I should be there. So there is a clash. We'll see. एक दिन आगे पीछे करके अगर join.
So commitment to Taj versus commitment to college में बहुत फर्क है. अगर कोई यहाँ का हर बर्थडे पे मिस्टर चटवाल आएंगे लेकिन कॉलेज वाले के 40 पे भी नहीं आएंगे कोई गारंटी नहीं है मैं इनको अबोध लगा रहा हूँ
तो रैप करने से पहले वो जय वीरू बोल सकते हैं ना जी कॉलेज जय वीरू सकते हैं जय और वीरू कौन है बता दो पहले कौन जय कौन वीरू
जो शरीफ वाला होगा मैं ही होऊंगा
Welcome back. Still tuned into the market. Let's get you up to speed with all of the other stocks that will be in the spotlight today. And metals as a basket, they've underperformed the benchmark Nifty this year. But the question is, next year, could the tide turn? Will the price of domestic steel inch higher? Let's understand more from Ashesha, who tracks the sector closely and joins in with that perspective. Ashesha?
So the Nifty Metal Index has underperformed on a year-to-date basis. At a time when Nifty 50 has risen nearly 18%, Nifty Metal Index has rather underperformed with returns of nearly 12% on a year-to-date basis. But the big question now is, will the tide turn? Now, of late, global steel and global metal prices have seen an uptick. Aluminium, copper, steel, zinc prices have risen anywhere between 12 to 8% in the last 5 days alone. Let's talk about the ferrous space in particular. Global steel prices have risen nearly 1.5% in the last 5 days, and they've been on an uptrend over the last few months, but domestic steel prices have not risen in tandem. Higher imports, lower exports, higher inventory at mills are the primary reasons why domestic steel prices have risen in tandem with the global steel prices, but looks like the tide could turn in the coming quarters. Remember, domestic steel prices could rise on account of higher raw material prices. Both aluminium, both coking coal and iron ore prices have risen in the last few months, because of which domestic steel prices could probably inch higher in the coming couple of quarters. Apart from this, globally also globally steel prices have seen an uptrend, because of which imports have become expensive, and hence this could also make a case for a surge in domestic steel prices. Let's also talk about the key triggers for the metal space in particular. China's real estate meltdown continues. Remember, despite several measures that the Chinese government has undertaken over the last few months, Chinese real estate market and the impact of Chinese real estate market on the global metal market continues to have a negative impact. Apart from this, now we are also seeing Red Sea issue, because of which major global logistic players have started avoiding the Red Sea and the Suez Canal route, and hence perhaps exports of major steel players could also be impacted because of this. Remember, major steel players, the likes of JSW Steel, JSPL, export anywhere between 11 to 13% of their total revenue, and perhaps exports of these players could be impacted because of global geopolitical crisis. Apart from this, Morgan Stanley also came out with a note some time ago where they said that the underperformance that we have seen in metal stocks in calendar year 2023 could perhaps continue in 2024 as well. They say unattractive valuations, global macroeconomic concerns, and higher supply than demand could be the primary reasons why while underperformance in metal stocks could probably continue in FY24. Meanwhile, they also say that domestic steel demand is expected to remain strong, but spreads are expected to remain range bound.
Right, Ashesha. We were at that. In the meantime, Vedant Fashions, they conducted their management meet. What are the key takeaways? Gaurav is here from our research desk with the takeaways.
So BNK Securities met with the management of Vedant Fashion, and if you look at the stock performance, it has been one of the most underperforming stocks in this year, we could say, because the YTD performance, if you see, the stock has remained almost flat in this year itself. So what the management has highlighted is that they believe that the current situation is a little challenging for the company, because there are some competitions going on and it is growing in the industry itself, but they still believe that there is scope to expand their footprints almost by 50% from here on. And they are keeping their focus remained on the expanding their women clothing category. The performance, if we talk about the performance of the products which are sold under Twame brand, are still good according to the company, and the performance of the brand Manthan, which they have, will remain specifically in the D2C segment. But all in all, it seems that the management is also a little worried about how the competition is going to grow from this moment. So let's keep an eye on this stock and see how it turns out.
All right, thanks very much for giving us those updates. Let's get a move on then and put the spotlight on a corporate voice to understand a little bit better about the business prospects. Satin Creditcare, they've launched a QIP. We've got HP Singh, Chairman Managing Director, now joining us. Thanks so much for taking time out. Let's just talk about your latest QIP plans. Can you highlight where the buying interest is coming from and any sort of conversations that you are having with your investors?
So our QIP has been launched and successfully completed. We've raised close to about 250 crores in this QIP. We've got institutional investors who have participated in the likes of ICICI Prudential Life, Bajaj Allianz, and we've got Societe Generale. So we've got the floor price at about 242 rupees, which was the floor price, and a discount of about 5%. So the shares were issued at about 230 rupees. And this is growth capital for us. And having successfully launched this QIP, I think we're looking at growth for us. Our capital adequacy remains very healthy. It was about 25 to 26%, before the issue, but gets bolstered down for us. And this bodes very well in terms of positivity for our company.
Yeah, that. But while the RBI's risk weight measure, Mr. Singh, may not impact your company's Tier 1 capital, could there be a second order effect on the cost of borrowings? What's the trajectory that you're expecting?
I don't think so, since microfinance has been exempted from the risk weight categories by the RBI. For us, I think in terms of cost of whatever rate hikes had been there have already been done. We are now looking at the environment where I think the rate hikes are not going to happen. For us, there is no possibility technically of any cost of funds being increased in terms of our rates. And we are looking at, in fact, post a couple of quarters, if this remains stable, in fact, I think the cost of funds will probably go down from there. And the same would be probably passed on to our borrowers.
Interesting. Tell us about the disbursements momentum as well, the customer additions. Are you on track to achieve the 25% plus growth?
Yeah, absolutely. I think, the guidance which you've given for a 25% plus growth, that remains in terms of our disbursement, looking at the past 2 quarters, hopefully. And we are very sure that we'll be able to have a 25% plus growth. The momentum is pretty strong in terms of the demand, which is coming in at the back of, good monsoons, as well as the productivity in agriculture and allied activities holding ground. So I think that all bodes well for the guidance which we've given to probably, even surpass that, to a certain extent.
Okay, fair enough. And you're also diversifying into the non-MFI segments in the long term as the contribution from that increases. Would the yields then come under pressure?
No, I don't think so. No, those are two separate businesses which we are looking at, both housing as well as MSME lending. And both are more focused towards the rural landscape. So we feel that, I think, over there, the pressure is not there on the yields. The pressure on the microfinance is also not on the yields, As I said, earlier, if any cost of funds goes down, that'll be passed on. So probably the yield will remain in the same levels as such, So no pressure on the yields as such.
And given that the RBI as well has sounded caution on unsecured loans in the system, microfinance, although income-generating loans are largely unsecured in nature, are you seeing any downside risk on your asset quality in the near term, or any credit cost guidance that you can share with us for FY24?
No, I don't think so. That is probably the case, because this is more productive loans which we give. And as you said, these are income-generating loans. Definitely, there's a difference between a consumption loan and a productive loan and a income-generating loan. So I think, the downside risk is not there because this is required for genuine business purposes as such and for economic activity. We've given our guidance for ROA, which is 3.5% plus. We've already, surpassed that, and we still remain very hopeful that we'll be at stable ROAs in terms of our long-term view, which is there.
Sure. Bigger peers, Mr. Singh, in the NBFC space, like Bajaj Finance, have started pilot operations in the MFI space. How is it that you view this competition? And could your yields growth be challenged at any point?
I really don't think so. It's a very wide market. And if you really look at the demand, I think, if we've done possible surveys by the SROs as well as various other agencies as such, the demand technically talks about, we are close to about 4 lakh crore in terms of the industry size. What, the demand probably foresees is for the next 5 years, this will probably grow up to about 15 to 17 lakh crores. So looking at the demand and the capability of growth, which is probably there, and I think, all players are welcome. I think, it actually bodes well for the sector, when, I think, players like Bajaj Finance enter the arena as such.
Appreciate your time. Thanks so much for flagging off all of those details. That's the management of Satin Credit, saying that a 25% growth guidance remains. Momentum is strong on the back of agri activity as well that is picking up. All right, let's move on and let's take a look at other stocks that are in news, Manappuram Finance being one of them. They conducted an analyst meet where the management was confident of maintaining the gold AUM momentum, also saying that competition in the NBFC space is under control. Let's get in Vamakshi, who joins in with some of the key takeaways. Vamakshi.
Well, yes, Manappuram Finance in focus. The company did hold an analyst meet yesterday, and we have some important commentary that came through from the management. As per the management, 34 lakh crore assets under management are under the NBFC sector, and the sector continues to perform well in their opinion. Asset quality remains quite comfortable, barring certain select unsecured loans. Now, gold loan, which is their primary source of business, accounts for almost 53% of their consolidated business, and this has seen an uptick of almost 8% on a year-on-year basis in the quarter gone by, and the management is confident that around 8 to 10% growth could be seen in this segment. Competition of NBFCs is also under control by protecting the customers and restricting yields to almost 21 to 22%. The underlying price momentum on the gold side, in fact, will lend comfort on both the growth as well as the asset quality for gold financiers. They believe that they will continue to on their strategy to de-risk the business and diversify into different product segments. So, as of now, their non-gold loan business share stands at 47%, and the company expects to scale this up over the next few quarters. They have also highlighted that the non-gold loan verticals have now begun to report profits. There has been certain stress in rural segment, but MFIs still continue to hold strength. In fact, the MSME vertical for the company is expected to be a very strong growth engine. Vehicle finance, the GNP has actually seen a marked improvement from 6.7% to 2.4% in the quarter gone by, and credit costs have remained below the 1% mark. They've also ventured in EV financing, and they are expected to increase tie-ups with dealerships. Asirvad Microfinance, well, the public issue is expected to come through by mid-Feb, and in fact, the company has highlighted that post-COVID activities of existing gold finance customers have been slightly reduced. However, they will focus on return on equity delivery of over 20%. So largely, those were all the important takeaways that have come through from the management of Manappuram Finance, and on the back of that, watch out for this counter.
Yes, we sure will. Mamakshi, thanks for highlighting all those details. Let's also focus on what's happening within PSBs. Of course, time and again, we're marking what SBI has been up to. But there's an interesting note by Motilal Oswal this morning. They've raised the target prices for an SBI to 800 rupees per share, and that stock is currently at 655. It's really been a lag stock all through this year with just a sub 7% kind of an uptake. BOB has now been up to 280, the target price. Canara Bank to 550, Union Bank to 150, Indian Bank to 525. So they're talking about capital raising, healthy tier 1 ratio, the capex cycle uptake, strong earnings turnaround, improving ROAs, which is why they're turning so bullish on PSBs. Kunal, SBI, the giant from within the PSU pack, such a meager performance year to date. You think it'll participate with the catch-up that you're betting on from the underperformers within the private banking space?
Yeah, I think it's a very strong likelihood that SBI could be amongst the top maybe few performers from the large caps banking names. Of course, I think, yeah, as you rightly pointed out, that the stock has been a huge underperformer. And, I think there was a point in 2021-22 where SBI and ICICI Bank were the only two outperformers. Then in 2022, the mid-cap and the private, the PSU banking stocks, they were the ones which started to, outperform significantly. And for most part of 2023, SBI was trading in a range. So I think 550, 545 broadly was the support for the stock, and 600, 625 approximately as a resistance. Just last week or so, where the stock has given a breakout of the 625 mark. It's a very strong breakout. It confirms a triangular pattern on the weekly as well as on the monthly charts for SBI. So I think this could not just be a short-lived trend, this could be a trend which would last for at least another 6 to 9 months, if not more.
Okay, Nishal Maheshwari also joins us. Nishal, good morning. Thank you for joining us. So what are you advising your clients? I mean, ride the momentum or time to take some chips off the table?
Morning, Nikunj. I think at the moment we are just advising basically to ride the momentum. I think that is what at the moment we are recommending.
Why are you telling your clients to ride the momentum? Because the purist would say that there is bubble and trouble in the IPO market, promoters are selling and valuations are not stretched. So why not being contra? Why should one be with the crowd?
So I think there are 2 or 3 factors basically, and I think most of them are macros. So you are looking basically across the world that the interest rates are peaked out, and Fed has now actually given a signal that they are going to be doing at least 3 rate cuts in the next year. Oil is benign. If you look at domestically, I think most of the macros on the domestic front seems to be doing okay, and economy doing well. So I think most of these macros are in a good position at the moment, and given that the interest rates are likely to get cut across the world next year, I think that is risk on for equities. So most asset classes. So I think equities is the best place to be in this kind of a scenario.
Nishchal, hi there, morning. Let's also get in your take as to what the outlook holds in store for IT as a sector for the upcoming year. It has been slightly ahead of estimates when it comes to Accenture's numbers. Do you think that the optimism will set in?
I think so. Basically, as I told you, I think US interest rates are getting cut, and the economy is doing much better than what most people were expecting. I think everybody was expecting that there's going to be likely a recession in the US, but the last quarter US numbers have surprised everybody. So I think economy is on a good footing. Interest rates are going to get cut, and most of the IT companies, the market is the US for them. So I think they will, in the coming quarters, do much better than what the market is expecting.
Nischal, banks have underperformed IT this year. Banks is where there is visibility, there is margin of safety, there is reasonable amount of valuation comfort. Yes, it's the other way around.
So, Nikunj, your question is...
no, my question is that banks, on paper, we can say that they are cheap, they are growing, no NPAs. Yet, banks, the banking index per se this year has given a return of 12% and IT has given a return of 22%. Despite a hazy visibility for IT has given returns which are better than banks, which has a 6/6 visibility.
So I think that's more to do with the cash, the fund flows. So IT has been supported by the domestic because they were underweight last year and they have continued to buy. And banks were being sold by the FIs till very recently because they were very, very big overweight on the banks. And if they had to sell India, I think largely they own banks and they have been continuously selling except for the last 2 months. So that's why you see basically this kind of a dichotomy. Though banks, I think the fundamentals are looking much better, and IT is still hazy outlook, but they have given you different kind of returns.
Okay, I'm going to switch gears and go to Nooresh and talk about a few mid-cap names where the action yesterday was quite encouraging. Breakout stocks, Nooresh, for you: Devyani International, Aarti Industries.
So, Devyani is a single day move. The stock has been sideways for the last almost from the time it got listed. It made a top around 200 levels and goes back to 140, comes back to 200, 220, again takes a dip. So, till the time it doesn't cross about the 200, 220 mark, it remains a sideways stock. And the whole sector has been sideways. So, you don't want to participate here, even if there is just a move in a single stock. So, out here, a single day move would be an avoid. Aarti Industries, on the other hand, has given a reversal and a momentum. The stock went into a deep correction over the last 1 year, has made a recovery, made a big volume uptake and a recovery at around 500 levels. The trend is still positive. You want to be buying on dips because the stop losses are a little deep, but looks like it could be a slow uptrend on Aarti.
That's a view coming in on the charts. Meantime, maybe Nishchal, a bit of a quiz, because that's exactly what Nikunj did to us this morning, quizzed us on this, talking about the IPO trend over the last many years. And he asked whether or not IPOs this year, 2023, have raised more than they did in the year 2021. What's your guess?
I don't think so. I think it has been only last 2 or 3 months, basically, where the IPO market has been pretty hot. But I think most of the year, there was hardly anything.
You are, because in 2021 it was about 1.18 lakh crores and year to date it's been about 49,000 crore rupees. So yeah, that's correct, getting that answer. But speaking of the kind of IPOs that we've seen, December alone has actually seen 11 IPOs come about. What's your assessment as to all the action that we're seeing within the primary markets? Has there been any sort of company profile or any individual company that has caught your eye this year?
So there have been several of them. I think the one outstanding or something which surprised me was Irida's IPO and the way the market lapped it up, and thereafter the performance of the stock. I think that seemed to be a bit unwarranted according to me, but I do not have one coverage on that. Neither I'm a banker. So that's my personal view.
Anything else in the IPO market which you think is a good business? You may don't want to buy it right now, but on a 15% decline, you would like to buy it.
Nikunj, sorry, I have not studied most of them, given that I'm not a banker on most of these issues. So it's very difficult because these are all private companies and only limited amount of information comes under DRHP. So difficult for me to comment on the IPOs.
Just looking at the sequence of the market right now, and nothing large in terms of anything which could be big in the, one stock which is worth revisiting, Kunal, I think is AU. It's been a outperformer. Suddenly that is underperforming.
AU Small Finance Bank. Yeah, I think it's been an underperformer, Nikunj. And I think, when I looked at the charts many a times before also, I think it's been very tricky to see that the stock has somehow faced a lot of resistance closer to this 800 level. So, 800 approximately becomes a major resistance zone for AU Small Finance Bank. And I'm talking about the bigger trends when they've shaped up for AU Bank. And closer to, I think, 650, 670 is where, there's been major support or demand for the stock price. It's very difficult to try and comprehend why the stock has been such a huge underperformer. And I think over the last 3 to 4 years, the stock has tried to dabble into this range without any kind of a meaningful breakout. In fact, there have been many points when the volumes have surprisingly moved up significantly higher. And that was a point when, we sort of preempt that, maybe the stock this time around could break past about those 800 levels. But then all of a sudden, you see some sort of maybe a news flow event coming into the stock price, and it then goes into a corrective phase. So, we'll have to wait out for that breakout confirmation about 800, 815 mark to call it as a major trend reversal for AU.
Nishal, another stock which of late has seen a lot of yes and no is actually Paytm. A year ago it cracked, global investors were selling, then it made a comeback. Then suddenly in middle of the month, Reserve Bank of India talks about increasing and checking risk weight on unsecured loan, and Paytm comes out and says the obvious that our business will suffer because of that. Is Paytm a good contra buy at 622, or you think best is behind Paytm?
So I don't know about the future, but I think basically Paytm still has a very hazy model. And I wouldn't put my money on that basically because I think the primary business still remains to be payment bank. I think now they are saying that they're making money on that. But I think this loan, the loans which they started doing, largely personal and unsecured, it was a difficult market, and somewhere RBI would have stepped in actually because the kind of money which I think fintechs were doling out, I think it was worrying. And I think RBI has rightly come in and tightened on that market. Now Paytm comes out and says that they are going to be now targeting the MSME, SME. Now, the first one I would have understood because there are a lot of people basically on the Paytm platform who would have taken direct loans. So I think retail loan was okay, but where are they going to source this MSME, SME clients from? Now they are going to be directly competing with the other MSME, SME guys because they do not have natural clients. So that's why I was saying the business model is hazy at the moment. Till we get clarity, I wouldn't buy Paytm.
Okay, fair enough. Let's move on, Nishal, and get in your take on what's going on within the entire infra basket, because news reports seem to suggest that the highway awards are only going to pick up pace next year as a lot of the key issues, they say, get resolved. With this momentum, with the election impact as well, how are you looking at the capex-related theme, in particular infrastructure, construction, real estate?
So two sectors, obviously real estate is doing very well. There is no question about it. I think the cycle has just started. If interest rate just keeps on getting cut as I expect, I think real estate for the next at least year or two will continue to do well. Infrastructure, you have to be selective. I don't see the road companies which have historically done very well. Basically, this year there has been hardly any orders. There have been companies which have got not a single order of road basically in the whole year. And that's why you should avoid all companies which are only road. So look at companies basically which are doing multiple jobs, basically whether it is buildings, metros, Highways may be a part of it, but I'm seeing diversified company. Railways, I think these are sectors which are doing very well in the infra side. So there are a lot of companies out there basically which have been doing this. So you should focus on those.
So as you roll over to 2024, Nischal, what would be your large bet for 2024 in terms of an idea? Were you happy to allocate, let's say, 10-12% of your total allocation?
So, Nikunj, I would say basically the biggest theme which is going to play out next year is going to be rate sensitive, because interest rates are going to get cut. And there are several of these sectors basically. I put out one is real estate is one of them basically. Banking, autos, IT. I think all of these are going to do very well basically the next year in a rate cut scenario. Our top picks basically, if you would want me to name one, I think one of the banking stocks, large cap, and an IT name. So I think maybe a Tech Mahindra looks very interesting to me there. And on the banking side, I think though it may be the safe bet, HDFC Bank looks good to me at these prices, because I think it has underperformed the whole of last year.
Do you believe that Tech Mahindra could be a turnaround candidate after change of guard, or do you think the IT sector, I mean, you think you like Tech Mahindra because you like IT, or you like Tech Mahindra because of change of guard?
Both of them basically, because one, I've been liking Tech Mahindra because of change of guard. They are at the lowest margins with this kind of a profile basically and this kind of a turnover. I think the margin is just sitting there basically to improve, and Tech Mahindra is big on telecom. The telecom is coming back again. So I think that's where I like Mahindra, and obviously, so it's a re-rating candidate as well as the IT background also. So both of them basically will help Tech Mahindra.
Okay, fair enough. Meantime, let's also get in a take then from you, Nischal, as to what the outlook is when it comes to individual counters. Varun Beverages, for instance, CLSA has upgraded the stock. There's their plans as well to expand globally like South Africa. And you've also got Manappuram Finance in their analyst day were very confident with respect to the non-gold business as well. And analysts say that this is going to be pretty positive for the company, as it could help improve investor confidence. Do you track these two companies?
So both of them we do not have under coverage. Individually, I can give you my views. I think I like both of them. Both of them are good businesses. Varun has done extremely well in the domestic market. And now I think Pepsi has seen their performance and given them another market in South Africa. So I think if they are able to replicate, obviously South Africa is not going to be as large a market as in India. But if they can replicate what performance they have done here, I think this is a good acquisition for them. As far as Manappuram is concerned, I think for most of these NBFCs, banking, BFSI sector, it's a Goldilocks scenario at the moment. Most of them have raised money, good balance sheets, asset quality is benign at the moment. So I think at least for the next couple of quarters, you should be in, if you are invested, just remain invested.
Okay, Kunal, let's get in a quick take on the charts. Reliance Industries yesterday might have been a mover, but year to date has done precious little. What's your reading?
Yeah, so I think the stock, I think it's finally finding its mojo back. So, yesterday we were making this point that the stock in last, I think, 3 or 4 weeks has seen a blend of interesting data. So, earlier Reliance was a rank underperformer. The indices tended to move up, but this time around we've seen a dramatic change. The stock is now at least in line with an outperformance, or rather with the performance with respect to the benchmark Nifty. Now, interestingly, Reliance in terms of the charts is also poised quite well, because right now it's on the verge of breaking past above a inverted head and shoulder pattern, and for a change it's more of a continuation inverted head and shoulder pattern rather than a reversal pattern. 2600, 2608 I think on the spot levels is a breakout point for the stock. So would be very intrigued with this current move for Reliance Industries. The open interest in the last 2 or 3 weeks has also been very positive, because it's indicative of a major short unwinding for Reliance Industries. So that also probably adds to the 3-step up move which we typically look out for. First wave is a short covering wave, then comes out to be more of a long built up, or in terms of delivery based buying into the stock price, and that's where we see the trends breaking out for the stock price. So it looks very attractive, and I think from current levels 2600, 2608 is the breakout point for a bigger pattern for Reliance Industries.
All right, fair enough. Stay with us and let's put the spotlight on the trends that we've been observing with a sharp run-up in the broader indices. Is there a case to now move to large caps? Let's hear out some of the top voices on the channel as to what they are advising.
Markets are expensive, there is no doubt about it, from a 12-month perspective. But there are investors who are willing to pay, let's say, take 3 or 4 year view, specifically even the foreign investors who are willing to take 3-4 year view. If I couple that with the certainty of growth in India, right? So then market doesn't look that frothy or that expensive if I take a 3-4 year view. I feel that large caps will also do well here from here on, because if the money comes, which it will, even from the foreigner, given the sentiment and given the overall stability, then the first round of money will come in large cap.
While the small and mid caps in general and the broader markets have done phenomenally well over the last 6-9 months, I think the large caps in general have lagged. And so I think investors want to participate. It's time, in my view, that elephants will dance. So I think there is still an opportunity in the large caps. Not to say that there is no opportunity in the small to mid caps, but I think in a bull market, there's always sector and market cap rotation.
I think large caps will do well, because it is easy for new investors, particularly foreign investors, who are looking at India seriously, not only because India is doing well, because they are getting bugged out of shape in China. The larger cap financials is the easiest to buy. They're also a large part of the index. So even if these guys underweight, overweight, they still have to put, if not 30% then 25%, but all that has to go into the same large cap names. And within those 3 groups, which is financials, consumer and IT, it is easiest to buy financials because they are doing well and the stock prices have not done well.
General fact that the retailers are making money across all segments. They're not limited only to equity. Gold is doing exceptionally well. Bitcoins are doing fine. Irrespective, housing is doing very well. So generally, there is wealth creation across sectors, which will generally cause greater interest in asset classes, of which equity will also be a part, because you could have a diversified portfolio. The next is the return of FIs, and I think that is going to be a big catalyst for the market. Many people make a statement that the retail is the only element in the market that matters. Retail has caused us to reach where we are. FIs will cause us to move ahead from where we are, because they will now, there's likely to be participation, particularly in the large cap names.
All right, those are some top market men speaking to ET now, but let's get you an exclusive conversation we've up for you. As the Taj legacy lives on, notching 20 years of excellence, let's listen in to this conversation with Nikunj that he had with Puneet Chhatwal, the CEO and MD of IHCL.
Chhatwal sir, what has made Taj Taj?
I think without dwelling too much into past, एक चीज तो बोलनी पड़ेगी, Taj and Indian Hotels is the oldest operating company of Tata Group. And this was the vision of the founder that made it happen. The first electrified building in the country. And Taj is not just a hotel. Taj is not just an icon. Taj is not just a temple of hospitality. Taj actually is an emotion. And I have worked across the globe, but I've never seen this kind of connect that people have. Taj dil se. So of course there is luxury and there is timelessness and there is excellence and all that stuff is there, but that many people have, many brands have. And I would say Taj is the national crown jewel because this is one name that is traveled across the national frontiers to the most important destinations in the world and has seen the World War I and the World War II and the various pandemics, including the last one, and has always risen to the occasion and done not the right things, but has done everything right also.
icon of Indian history, the Taj. So Chatwal Sahab, what has made Taj Taj?
Taj is not just a hotel. Taj is not just an icon. Taj is not just a temple of hospitality. Taj actually is an emotion.
What is a new resolution?
कोई resolution नहीं करना चाहिए. 60 साल में नहीं कर सके, अब क्या करेंगे?
Nishal, it's been a good year for hospital and hospitality. Just a coincidence, right? But hospital and hospitality stocks, they both have done well. Next year, what will be doing better? Hospital or hospitality?
So I think you have to look at it saying that one is more of a cyclical industry, which is the hotels, and hospitality is a much longer industry basically, because as you go or as your per capita income goes up, the spending on health starts going up, and what we started seeing in India. Suddenly you see a whole bunch of hospital chains basically coming up. So Indians can afford now better medical care, and that's why basically we're seeing all these hospital chains coming across. So I would say basically if you are a long-term investor, you should be in the hospitals, because that's where the long-term continuous growth of 10-12% I very clearly see for a whole decade in the hospital sector. Hospitality, obviously, I think this is a good year. Last year was good for them. Again, I see at least for the next 2 quarters, they do continue to do well. Beyond that, not much visibility.
Thanks very much, Nishal, for joining in and sharing with us your outlook on the markets, and wishing you a festive season and New Year's greetings ahead. All right, let's also take stock then of some of the movers in yesterday's trading day. And by the way, what's up on the frontline index on the pre-open rates? I'm just going to mark that first. Holding on to the 21,500 mark, by the way, on the pre-open trading day. And you've got a session rather right now with the Sensex up by about 190 points. Let's find out mid-cap strategies too. And Nooresh, what's looking good?
So continue to like Motilal Oswal Financial Services. The stock has given a breakout yesterday on the flag formation as well, and has given a 2-year high breakout. The stock used to be 1200 back in 2021 mid. So, and the whole sector looks pretty promising. We've seen all broking and AMC stocks do well. Expecting this to go towards 1400 plus levels in the short term, stop loss at 1170.
Kunal, let's get in your top trade from the broader markets.
Well, I'll go with a bit of an offbeat name. Gland Pharma is something which has started to look attractive. The stock is trading about 1800 levels. It's forming a classical cup and handle pattern on the weekly as well as on the monthly charts. I think that's more attractive patterns for the stock price, and the breakout of this neckline is closer to 1780, 1800 levels for Gland Pharma. So would suggest a buy with a target of 2000, stop loss at 1788.
All right, there you have it. Motilal Oswal, Gland Pharma, those are your top mid-cap trades, with news that the pre-open rates are at 21,550 plus. We'll take a very short break. Stay with us for more.